Yo, what's good, everybody? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries. That way you guys can become better traders. Good morning, good afternoon, or good evening, wherever you are in the world. We got a lot to talk about today. Bitcoin breaking out, blasting off to the moon based on a lot of good news that came out not too long ago, actually on this day right there. You guys have heard it. It's been all over Twitter. It's been everywhere. So many places are looking to do a Bitcoin ETF. Will this cause massive selling pressure? Maybe it won't, right? We got a lot of stuff that's happening on the macro scale that isn't really good. Obviously, there's a lot of talks about a recession. Is it coming? Hard landing, soft landing, no landing at all. Lots of stuff out there, man, and it's hard to get a beat on the market. However, if you just follow us, you won't have any trouble at all because we are known to make fantastic decisions and some bad ones too. But anyways, moving on, that is a legit breakout. I don't know how else to say it. You've been trading sideways to down for multiple months. And then at the end of this month, which, there's not very many days left in it, obviously, you get the breakout. Boom, straight up. If you look at this on a monthly time frame, as of right now, you have a bullish monthly engulfing in an uptrend. And when I say uptrend, if you're new to this channel, we do not look at data from the past because this is just, everybody's already paid taxes on that stuff. You look from the year-to-date chart. That's what you look. Year-to-date. Year-to-date, this is up. You were bullish. So, yeah, it's up. It looks good. A bullish engulfing monthly for now. Obviously, it's going to be a bullish engulfing no matter what, unless it closes bearish. Then it'll be a bearish engulfing. Can that happen in 8 days and 11 hours? Yeah, it's possible, but it's not likely, right? It's not likely. And I'm going to show you why. Bitcoin is a trend asset. It's traded as a risk-on asset. It has always been. This is not news. This is not something new. Does the halvings help Bitcoin move to the upside? Yeah. But I mean, if you look at Bitcoin versus the SPX chart, just compare those two charts. You don't have to look at all the other info out there to realize that, yeah, Bitcoin typically trades with the risk markets. This year is a little bit different. It is. It's very much different because we've got different things happening that's never happened before, right? So let's get on with it. First and foremost, the S&P 500. This thing is doing something that it has never done before. And just believe me when I tell you that I have went back in the entire history of the data that TradingView has on this asset all the way back to the 40s. And it has never done what it is doing now. And what I mean by that is, the typical definition for a bear market is a 20% loss from the all-time highs, right? And then you got the typical 20% off the lows above is considered a bull market. All right. But if you go year to date and don't even worry about what happened in 2022, you'll see that you're in an ascending market. Everything looks good as far as indicators are concerned. There's nothing out there that suggests you're going to see a massive downside move like a 2008 style bear market. You can see here that from high to low that we dropped 27.54%. You can see from low to high, we moved up 27.41%. That has never, ever, 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 ever happened in a bear market that you got that big of a bounce. And it's not just that, it's this last part. And that you were only 7%, 7.74% off the all-time high. Put that into perspective, all right? In a bear market, usually price drops, right? It just, it pukes. Does that look like a puke? Or does that look like a 60-40 plan getting rebalanced? That's what it looks like to me. Now, am I saying that a recession is not happening? It is not going to happen? Of course not. Of course not. I'm not saying that. The yield curve inversion is still there, right? And the yield curve inversion has been pretty solid about calling future recessions. But this is the question that I'm going to ask you, dear trader. How is knowing that potentially in the future a time to be determined could possibly, maybe, almost 100% be a recession in the future? I could say that. I could say that. How is that going to help you make decisions now? It's not. It's useless info. It's garbage. It's fear and sex, right? Fear and sex, the two best sellers in the world. Those are the two best sellers. So of course people want you to fear everything, right? Can new bear market low or can a new low be made on the S&P 500? Abso-freaking-lutely. Absolutely. Back in 2019, when the interest rates were getting hiked a little bit too quick, the market reacted bearishly to that. All right, it did. It almost put in a bear market. But look what happened after, right? It made fresh, new all-time highs. Would this still be considered a bear market if you make new, fresh all-time highs? Of course not. Not anybody in the world would say that a bear market is ongoing when you're making fresh, new all-time highs, right? That's the exact opposite. You're in a bull market when you're making fresh, new all-time highs. Can you have pullbacks in that bull market? Of course you can. What I'm looking at here is from December the 18th, which is a very odd month. You put in your low. Why is that? Well, because it was the yearly open, right? People selling off at the end of the year, getting their taxes in prepared. And then at the new year, you got a fresh new trend, and that trend exceeds the all-time high and continues. Now, over here, several, months later, you get, the pandemic, which is basically, as far as price action goes, you just chalk it up as to it was a pandemic, right? And a lot of governments across the world shut down the economy. And in this economy in the US, we are a debt-driven economy. That is basically how it works, right? So we're a debt-driven economy. But this was obviously a bear market. You dropped 35%. But if you would have been stuck on that, oh, a recession is coming, I'm not gonna invest now. What are you gonna do? Wait till you hit all-time highs to invest? I mean, you can do that because there's still plenty of upside that comes, sometimes after you have a tremendous drop in prices. This was a 35% drop. Our current drop was a 27% drop. So that's kind of low. Yeah, 20% is bear market standards, but 27%, I wouldn't exactly call that a bear market, right? I mean, let's just go back. All right, this right here, this is what a bear market looks like right there. You drop 20%, and this was the highest pop, mind you, before the low was set in. Right there, it was a 12% pop from the high, right? That's 20%. Anything over 20%, that's when I started to look for the highs or the bounces. The market is open. We will look for entries, but we got at least 15 minutes. But let me just get through this rant because I see so much stuff on Twitter that's absolutely misleading and garbage. But anyways, this is what a bear market looks like, right? And if you go ahead and throw on two little indicators, this is a weekly time frame. If you got the 21 exponential and the 50 exponential moving averages up, you can clearly see, right? Clearly see. Like, this thing came up and made a trap for like 3 or 4 weeks on the 21 and then dropped, and it never touched it again. It was over. It was week after week. It was making new lows after new lows after new lows, right? Tearing the world apart. This was one of the biggest drops in the S&P 500's history, bigger than the one that occurred during the 2001 bear market. And back here in the 2001 bear market, you can see you did have pops that were higher than 20%. This pop from swing low to swing high, 21.68%, and then more downside happened or a new low occurred. And then this bounce, you got even as high as 24%. But why is this time different? Because in both of those bear market scenarios, you were well off the highs. I mean, well off the high. This pop right here, even though it was a 24% bounce, it was still more than 24% away from the all-time highs. Can you see the difference? There is nothing that even comparison or even remotely looks similar to what we got going on now to what we had back then. Now, this is not me saying that we're going to see new all-time highs or any of that. Obviously not, right? We heard Powell the other day. He clearly said that they are anticipating 2 more hikes this year. There is a pretty high probability that there is going to be a hike in July, which is next month. I'll go ahead and get that rolling. So like anything can happen. We could still see new lows. But what I'm trying to say is I wish everybody would get off of this massive doom and destruction mode out there. All right, and then I want to ask this question to all of my traders, all of my fellow investors. Are you on the sidelines still? That's what I want to know. I mean, if you have a Twitter account and the word trade or trades or trading or trader is in your name, your handle, and you are still a bear, what is wrong with you? Secondly, I must ask you, have you been shorting every single pop? We haven't been. We've been bullish since January the 1st, right? January the 1st. So, yeah, not as bad yet as 2008, 2001, or even way, way back, right? There's many, many bear markets that the S&P 500 has had. There was one point back in the 40s that literally you had the bear market and it lasted forever, right? Look at the time here. So from all-time highs here, 44% bounce, all right? So like I said, just because you're bouncing 20% does not mean that the bull market is going to continue. It doesn't. But what I'm saying here is if you look from where the all-time high was, where that bounce occurred, you're going to see that you were still almost 20% off the highs, right? And then price rolled over. So if price does roll over without making a new all-time high and makes a fresh low, you will have something very, very brand new that has never happened ever before. All right. These two indicators are trending indicators. So in a world of chop, they can definitely hurt. They can definitely hurt you. But right here, this is 1929 when that bear market started. Obviously, you got very low, right? Because just this high to this low is 44%. This was an epic bear market that literally was terrible, right? 86%. And then it literally traded sideways for a very, very long time. 1929, you didn't make new, fresh all-time highs until when? All the way over here. So this actually lasted for a long time. This was sideways, right? But there are still trends inside of this that you would have been able to participate in. And that is my whole point. Having this information that is absolutely 100% useless because not one person can tell you when the recession is going to happen, right? So if I can't tell you when the recession is going to happen, how are you going to trade for that? You can definitely hedge. You can go 2-3 years out on options and hedge, right? You could do that. That can happen. But you can also just, look at the trend. The trend is up. It's sideways, but it's up, right? It's definitely up. Year to date, you're up. And that's good because year to date, you could have participated in that move. You did not have to wait, right? You did not have to wait. So anyways, moving forward, where are we currently? What's going on with Bitcoin? Well, obviously, there you go, right there. All right, so we hit the 21 exponential on the weekly. This is where I was looking for a potential bear trap to happen. And what I mean by bear trap is I wanted to see a bearish weekly candle close under the 21 exponential. That would have been a bear trap. We did take out 2-week support. So in that fact alone, you do have a you do have a bear trap, right? This was 2-week support. So since we've been trading sideways, this was the area that we were looking for potential areas to buy. Just Tuesday, right there, Tuesday, okay? You can go back and watch Tuesday's stream. I literally said, if you want to be a buyer, you buy here. If you want to be a seller, you sell here. Now, obviously, if you chose the latter, you were wrong. You were wrong. I wouldn't have taken a short there. We did attempt a short yesterday at monthly resistance up here, and you can see what's happened, right? That short did not make any money. It lost. So what do we do now? Well, there's nothing to do because you're trading above monthly resistance. You're trading above 2-week resistance. You're trading above weekly. Well, you were trading above weekly resistance. You're not anymore. So like that's as pretty much as low as you want to go. And you almost took out that day right there, but you didn't, right? You traded up to it. It got so close. I was actually expecting fresh yearly highs on this day. I wasn't that morning, right? That morning it was slow. When the market opened all the way up until 10 o'clock, Bitcoin had only moved 2%. It was a very, narrow range, but ultimately it blasted off. So is it going to roll over here and make fresh bear market lows based on the news? It's possible. We know that for a fact that big investors will sell into moves higher, especially if they are in profits. All right. And you can see if we go over here to the accumulation trend score, which I'm pretty sure I'm going to get rid of this because this stuff actually does not help at all for me because I am not an on-chain analyst. I am a price action analyst. Give me 1 second. All right. Sorry about that. Let me back this out just a little bit and kind of show you what I'm talking about here. So like according to this indicator, this metric, this when it lights up, that is your accumulation, right? That means that there is heavy accumulation happening. And when you're in dark brown mode, that means there's literally no accumulation happening. Now that does not mean that there is selling happening. It just means that there is no accumulation happening. And when I say accumulation, I mean on exchange, right? Because that's what this indicator does. The accumulation trend score is an indicator that reflects the relative size of entities that are actively accumulating coins on chain in terms of their Bitcoin holdings. This scale of the accumulation trend score represents both the size of the entity's balance or participation score and the amount of new coins they have acquired / sold over the last month. Blah, 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 right? It's just they're looking at all exchanges and stuff. Well, anyways, anybody that accumulated here at roughly 28, 27, 27, 28, 28, 27, 28, 27, you get the idea, right? You are above that now. And notice how as price is moving up, these start to light up a little bit more. Why is that? FOMO. People will buy highs. They wait for price to move, then they buy, and then they get stopped out and they wonder why. They're late. They don't buy supports. They have no method whatsoever. They just simply see this and they freak out and they're like, I missed it. I'm going to buy now. And bleh, price doesn't do anything or it pulls back. So this was the area that we were looking to buy. We needed price to get back above that. And then secondly, we needed price to close above this. Now we still haven't closed the weeklies. And like I said, yes, this heavy selling could appear and then this thing could close all the way down here. We've seen it before. Look at this wick, right? Big, nasty downside move that ended up closing as a doji, essentially. So it could happen. You got 4 days left on this close, but we wanted to see it close above this. Why this? It's simple. This is your last up closing weekly bullish candle. It's just that simple. You can see on the weekly, since this candle closed, every candle after that was closed lower than this candle. Then this candle was a bullish candle. Close there, boom, boom, boom. 3 lower closes, then a pop. Then 2 lower closes. So obviously price was trending to the downside. So we needed to see price get above at least this weekly candle. So that way we could basically say, all right, yeah, that looks good. We finally have a higher up closing candle. And if you want to use trend lines, you can do that. I don't care, whatever. However you want to analyze this price action, it is very, very bullish. Now, could this be a short squeeze? Absolutely, it could be. We've seen that occur on this day here. The very next day after the SEC announces that they are going to sue Coinbase and Binance, this massive move to the downside closed under support. It also took out this low, which is the, this close, which was the lowest close. So we were looking for more downside after that. And you got it, except for the very next day was a massive short squeeze to the upside. Literally everybody was short. And then after that, price revisited this close and boom, dropped under, closed under. 2 days later, made that a trap. It's like that. So we were looking, as long as we were closing dailies above the 50 and the daily 21 EMA, that suggests, as this is a trending indicator, it does not mean that price will continue higher. Just look right here. There's a close above, close below, close above, close above, close below, right? It's a trending indicator. So in a sideways market, it will not help you. But what it suggests is, after this candle was made a trap, buyers hopped on. It's as simple as that. They were buying support because it never dropped under that bearish candle. The next day, you traded a little bit lower and boom, to the upside and closed above 2-week resistance. So when we were calling it resistance, it was support, but support can act as resistance. But during this day, right, this day, I specifically said buy 2-week support, 26,752, or if you want to be a seller, sell up there. And if you've done that, you're in good shape, right? I missed it. I got long. I got stopped out intraday. So this was where I got stopped out, right? Price trades into it. Boom. I buy here. We get a nice move to the upside right there. And then on this candle right here, I got stopped out. Now, I did take profits on this little move to the upside. Compared to this candle right here, it looks like nothing because it traded up into resistance. This is resistance. So on this wick, boom, take profits, move your stop. This candle came down, took me out, and then price immediately left without me, right? And without a lot of people. Now, I hold spot Bitcoin because that's what I do. I trade on the inverse perp. And whenever I make profits, I move those profits off of exchange onto cold storage. So I've accumulated more Bitcoin over the last several years than I was able to buy, right? Because of the bear market, obviously, that we had in 2022. But since 2023, this thing has been moving to the upside. So where are we going to be looking for potential long opportunities, right? If this is a natural short squeeze, you may not even get a chance to buy into it, right? I kind of find it hard to buy at $29,700 when the yearly high is $31,000. There is a $3,000 range in there, so of course we will take day trades potentially, looking for that to occur. But what we need to happen first is we need a down day. We need a down closing day. And wherever that down closing day is, that's the price that we will watch for intraday opportunities moving forward. That alleviates you FOMOing into something that has already left the market. The train has left the station. Now, if you own spot Bitcoin and you're holding it in cold storage as I am, then you like to see this, right? Because let's face it, from 24,746 up to $30,000 is a $6,000 move. And depending on how many Bitcoins you own, that determines how big of a move you've seen in your portfolio, right? So back to normal, which is good. It's good. So not saying we're out of the woods. All I'm saying is that from this day forward, we've been looking for, mainly the trend to go up to sideways for the majority of the year. Never did I say that the low was in, which I do believe the low is in, but could we make a fresh low? Of course we could. Of course we could. Now, moving forward, this looks good. Price action looks good. Your risk assets look good. They need to pull back. They need to pull back. They were completely overbought on the weekly, daily time frames. Maybe that one's so bad, but the NDQ was massively oversold. I mean, overbought, right? On the weekly, even. This thing has literally been flying to the upside without any pullbacks. So we need pullbacks. We need a couple weeks, maybe 3-4 weeks of bearishness would be fantastic, as that would be an opportunity. Now, does that mean you will make money? No. It will be an opportunity to potentially get long, right? But you definitely want to see that support hold. And if the support breaks, you give it one more week. See if that week is a bear trap, because you had one right here, right? That's the area we would have been watching during this. This broke down, closed below, so we would have been watching the next week right there. That would have gave us a fantastic place to start to watch for entries. Time price got back above that, you could use that for an entry. Mark your low down there, because if you're getting involved in the NQ or the S&P 500 or even the Dow Jones, you're probably looking for trending to continue. That's what everything like right now pretty much says, right? Like you're breaking out to overbought regions on the RSI, which is a momentum oscillator, showing you that there is tons of bullish momentum. You lost your bearish momentum there when this close happened, and then you closed below it. You had bullish divergence right there. So that shows that the downside was losing momentum. That's a pretty decent signal on the weekly. On the weekly, that's key. Daily divergence is okay, but on the weekly, they are much better signals. For instance, this low here, close, boom, right? Look where it is versus the RSI. Well down there into the oversold regions. Then the next low there, much higher. So there's your bullish div on the weekly time frame that happened right before the fresh yearly open. All right. This has been pretty bullish, obviously, year to date. If you go right to that little area right there and go up, you can see that you were up 83% on the year. So basically, if you'd have bought freshly at the beginning of the year like I did, like many other people did, that position would be up 83%. Meanwhile, all the bears out there are still shorting every single time they have a pop in price. They've been shorting the whole way up. They're still going to short because nothing I can say is going to change their minds. All right. So moving forward, a couple areas you can watch. You can watch monthly resistance. See if price stops there first. Don't buy the first test, right? You want to watch daily closes around that area. Now pulling it up on the daily time frame, you can see that it's roughly the midpoint of this breakout candle here. However, that's still pretty high, right? That's still pretty high in this move to the upside to be a buyer. But chances are, like I said, if there's a short squeeze, you might get one bearish day and then boom, you get another move straight up. I'm not saying that's going to happen, but that's the way you got to play it. If we go over here and we look, I don't know why I keep doing that. If we go over here and we look at the short liquidations, you can see there's a spike there. Naturally, of course, there's going to be a spike there. Price moved up, and it moved up rapidly, right? Rapidly. So the gray area, or the gray line, that is your price for Bitcoin. This is your liquidations. So it's not that big, right? All exchanges, 46 million. That's not that big. Not that big. We've seen a lot bigger liquidations occur than that. Chances are, if you get above the yearly high, you're going to see another big spike of liquidations, because that's the last high people have to short off of. Except for maybe if they go back and look at old price action, right? So we got to wait for price to pull back. Would I suggest shorting it? No, I would not. You made a fresh daily low. right there is the daily open right here, this candle. So that candle's low was the low of the day today, not yesterday, today. Let's bring this line up over here. Let's get rid of it. Let's just get a new one because that's the way we like to do things. Right there. Nope, sorry. There. That's your open. So that's your current daily range. At the open, the Asian session, you had a little spike to the downside and then 3 hours of upside, then mostly sideways to down. Right there at 7 o'clock, you closed under and you have set a trap. But, like I said, you're at levels where significant selling will start to happen. People will start taking profits because it's the natural thing to do. If you did get long anywhere down around 25, 26K, price moves up 4 grand, you're going to take profits. Of course you are, especially if you're holding a big position, right? So it kind of looks like, as of right now, currently, that you don't have a lot of selling. The blue indicates more buying than selling going on. So that could ultimately in itself cause a move lower. However, right now you have intraday resistance here, and you just tagged it. That could be an intraday area to look for shorts, but remember, the momentum is to the upside. See how small the day's range is in comparison to yesterday? This is yesterday's range. It is a massive one. So you have not moved at all since the open. So if you want to look for shorts, these are the only 2 areas that I could suggest you do that. Maybe a fresh daily high, and that's only if price immediately reverses, because you're taking a short and you're doing it while bullish momentum is literally lighting shorts up, lighting them up. All right. So it currently looks like it is trying to push higher, but it could still roll over. All right. So I'll leave that to you. This is going to be the area of potential support. If you want to look to buy that, just understand you are buying at the highs. Can Bitcoin go higher for the next several days? Yes. Is it likely? Probably not. This is a very big move, right? It took literally 3 days to get, once you got above 2-week support, boom, 2 days of expansion. So I am myself going to wait until we pull back into a relevant level. I will let price decide that level. Once that level is assessed, then we will go into, we'll figure out what we're going to do. But I would at least like to see a pullback to that midpoint of yesterday's range, at least. That would be a decent sized pullback. So yeah, if we get a pullback back into 29.5, 29.3 in that area roughly, we will see if price actually holds a support, and it could last for several days, right? 2 days. You made a little bit of a higher high there on that day, and you trade sideways the next day, then you got your expansion, right? So I'm not looking for bullish expansion to occur after 2 massive days. I would like to see price roll over, find support a little bit lower. I would like to see a bearish day, at least one bearish day, and then see if that day holds support. So I will leave it up to you. There's your current day. It's very small in comparison to that. Right now, the DXY is pushing. It's starting to break back down, but you were up almost 0.2% today. All right, so it does look like our thesis on bearish dollar is starting to play out. All right, it's not played out yet. It needs to get below this candle. Oh, it's this one, to make a fresh yearly low, but I am still sitting in short dollar positions. Now, I did take a long position on Aussie dollar yesterday. It's down 0.42%. Now, I haven't been stopped out yet because that white line signifies my entry. My stop is setting under yesterday's low. I did take profits. I just haven't moved my stop up yet. I'll show you what that looks like intraday, and I'll explain why. Right here, this low was made, but I was waiting for the test of the weekly open. It took a couple days, and boom, there was the test of the weekly open. I will show you that on the weekly time frame. This not this current week's open, last week, because last week was the bullish breakout. This broke out above the yearly opening range. This broke out above all resistances, as you can see. So in order for bullish continuation to happen, I do not want to see this week close under the open. So I took a bullish entry. And you can see I got long on this test, as that is last week's open. That is the price that I expected it to bounce at, and it did. As you can see, I took profits when we got up into this resistance here. So on this candle, I exited the position, I haven't moved my stop yet, but I did take profits because I don't know if this is going to hold. I don't know what price is going to do. What I'm teaching you is where to find opportunities. That's the whole thing with trading, right? Got long there, boom, squeaked out some pips, right? That's what we want. I'm just going to go ahead and say that because of the spread. And we'll roughly say 53 pips of upside. And I was only risking like 15 pips of downside. So a nice move. Hopefully today the dollar continues lower. And hopefully today this is a higher bounce. All right. If you close an hourly under this current hour candle, that's your lowest close since this was put in. If price is going to rotate and start to move to the upside like the euro did, then we would expect this low to be maintained, or at least don't start closing hourlies under that. So 0.67563 is the current support, intraday support, right? If I pull up the daily, you're going to see that daily support is all the way up here. So what I would love to see today is a close back above 67.876. That doesn't occur, it will be more likely and more probable that my trade will get stopped out. All right? Because that's how dailies work. You have been making lower closes for the last 3 days. Yesterday was just a bounce. All right? That's all it was, a bounce off of a, high probable area. Then that became hourly support. So I want to see that price hold. If the daily closes bearish, then, like I said, whatever I have as unrealized P&L will get lost, because I would figure this to go lower. At least take out that low and then move higher, right? Because a lot of times the first tag isn't sufficient. All right, it's not sufficient. So we'll see what happens with Aussie dollar moving forward. And obviously that's going to depend on what happens with the dollar. Now, I was telling people to look for longs on Euro USD when we got back down here to 1.07046. I took the long. I got stopped out. Do you have a couple people that were able to get long here and not got stopped out because they were patient or they just got it at the right price? Right? Like say on Thursday, the 8th of June, if they would have bought on that day, they probably would not have gotten stopped out. And so far, you're getting close to making a fresh yearly high. I find that pretty significant, because if we just include BTC USD right here, obviously they are not correlated, right? Not correlated. Bitcoin's yearly open is right there, but you can see how you have the impulse move on the euro, you have the pullback on the euro, impulse on Bitcoin, pullback on Bitcoin, euro expansion, Bitcoin expansion, euro pullback, Bitcoin pullback, euro expansion, Bitcoin expansion. All right. So, yes, Bitcoin is a risk on asset. This is nothing new. We've been talking about this for years, right? All you got to do is know how to analyze price, and you can make successful trades left and right. And they can be long-term trades. Still currently sitting in this one, and I'm probably going to close it pretty soon because I'm wrong so far, right? I am short from the high all the way up there, and I expected this to roll over based on dollar weakness. However, the BOJ, which is the Bank of Japan, this is the Japanese yen that it is trading against, has a very weak monetary policy. So therefore, that means the Japanese yen is very, very weak. And if the yen is weaker than the dollar, then the USD JPY will move higher. In order for my trade to successfully work out, which I already took profits, okay? The only thing that's left on this trade is the unrealized P&L from that swing high all the way to that swing low. So I would like to see a fresh yearly low, but this thing is continuing to move up and up and up. And that is simply because the Japanese yen is so very weak. It has been trading as support here, but as you can see today, you're breaking down. When you hold a support line like that for multiple days, and you can't get any kind of bullish momentum, like higher bullish closes, then you just expect that price is going to break down. So even if the dollar does go lower, if the Japanese yen is weaker than the DXY, the USD DXY will go up. And as you can see right here on the currency futures, the Japanese yen is 0.4% down today, whereas the DXY is 0.12 up today. So of course the Japanese USD JPY is moving higher. All right, so we'll see what happens. But please, if you're looking for bullish opportunities on Bitcoin, wait for a pullback. Yeah, you probably are going to miss it, but guess what? There's an opportunity every single day in at least one of the markets we follow, right? Every single day. S&P 500 is pulling back, right? But if you look at the pullback compared to the weekly time frame, this is an area that I would actually like to see hold a support, because there is your breakout, right? Your breakout to the upside, boom. So we would want to see the midpoint of this candle hold. If it doesn't, then you could see a much deeper correction back down to 4,200, 41, right? Right here's your last support on the weekly time frame, 41, but you got daily supports in there before that. So you got one right there. That's where I'd like to see price hold. But as you can see, you're probably going to break the trend line, the parabolic trend line, because let's be real, from here to here is pretty parabolic. All right. I wouldn't trust any other trend line. So like, I wouldn't be getting super bullish on it for sure. But you can pull back to here at least. All right. Last couple times the S&P pulled back to the 50 on the daily. So you could definitely pull back to $4,200 before buyers step back in again. So let me just say this one last thing, and then we'll answer some questions or look at some pairs or whatever you want to look at. I don't care what the market is. If there's a trade, we'll take it. There's just nothing to trade right now. And I haven't seen anything to trade in Forex. Today, you're down on the NZD CAD, but you're currently getting right back up to support. So this doesn't mean that we're going to buy it today. What we'll do is we'll wait for tomorrow to see if price retests 81,629. And if that occurs, we'll try to get long and see what happens. All right. But Canadian dollar's been strong. So this is in a downtrend. It's probably going to continue to go lower. The other asset that we were watching, USD CAD, it ultimately did break down below a multi-month support. And it did give you an opportunity to get short, but I don't like to get short. I consider this one leg to the downside, even though you got in 2 bullish days in there. As a day trader, you could have taken it like how I did on your Aussie dollar, just looking for the bearish bounce, right? You could have done that, and right in there would have been a good spot to look. So yeah, I mean, things are looking pretty decent. You're down slightly on the euro. You're down slightly on the pound today. The pound had some bearish news today, right? This isn't the one we want. This is the one we want. So yeah, you got some bearish news in the pound. We were looking for Swissy franc shorts, but for some reason I was looking at some wrong data. I was expecting a 50 basis point hike, and it was only a 25 expected on investing.com. So that other website that I was looking at is wrong, because they were saying it was going to go from 1.5 to 2. So that's why I was looking for Swiss franc longs today around the London session, but it did not play out that way. But that's what I was looking for. Like I said, I'm not always right, guys. It's impossible to know what price is going to do, ever. I was actually expecting this to move higher. But I did tell everybody to be careful, because this move to the upside could have been that higher rate hike being priced in, right? It could have been that. So you broke out above weekly support. You're currently testing an area of support. There's nothing there on there. There's nothing there on that. So currently the only support we have to look for a potential hold would be 1.212, but you got to trade it versus another asset. So you want to look for longs against, like, say, the Japanese yen. So we would go look for Swiss franc versus the Japanese yen, and it's moving higher today. This thing is at all-time highs, mind you. If you look at the FXCM exchange, they have more data than everybody else does, than Oanda and Forex.com. So you can clearly see that you're in all-time high territory. This is as much data as I know that, that exists on a Forex pair, because Forex wasn't trading back in the 70s. All right. So I don't understand that. But it is what it is. All right. Any questions? Let me go back up to the top. Yo, what's up? Good morning, good morning, good morning, good evening, good afternoon to everybody. Thank you guys so much for being here. As always, thank you for your time. I try to shorten these up a little bit. Deutsche Bank getting digital assets license. Yeah, there's a lot. Like, the BlackRock just basically caused a cascade of other people trying to get a spot Bitcoin ETF. Now, several companies have tried to get a spot Bitcoin ETF for many years now, and it has been turned down every single time. There are people saying, well, BlackRock has a 573 to 1 hit rate, so it's probably a given. No, it's not, right? Because that means you'd be able to see the future. Now, the chances are more likely that they would be successful, say, rather than some other smaller company. But, BlackRock has $10 trillion in assets. So they're pretty large. So I wouldn't expect BlackRock to, A, file for a Bitcoin ETF. There are two reasons. A, they really believe in the asset and their customers want a Bitcoin ETF to invest in. Or B, BlackRock is doing it to prove a point, because they are the most likely to be approved for the ETF. If they get rejected, you know what I mean? They don't lose nothing, all right? They don't lose anything. I doubt it's the latter. I doubt they're doing it to prove a point. Back about 3 years ago, BlackRock's CEO came out and said that he wasn't aware of any one of his clients wanting to be invested in Bitcoin. Obviously, it's been 3 years since then. Bitcoin went to $60,000. Now, there's probably a lot of his clients that want to invest or put some of their funds into some sort of Bitcoin asset. Either way, it's good news, right? It's good news because it'll just literally cause people to start buying it. And let's be honest here. That's what price is supply and demand. If there's more demand for an asset, price goes up. If there's more supply in the asset, price goes down. Buying, selling. So, yeah, this pump could literally cause a sell-off, but I'm not looking for that to happen. And my main reason is simple. It's been trending higher since the beginning of the year. All right, you did get a 1 month pullback. Now consider we're 6 months into the year, almost. On the close of this month, that means you get a new quarter. You start Q3. So, yeah, we'll be halfway through the year. If Bitcoin maintains 16.5 or $16,500, we will be right, because we expected sideways to up, right? It's just basic. It's just basically, this thing was off 70-something%. And if you want to invest in an asset that you believe in, you buy it when it's cheaper, not when it's more expensive. Like, you don't rush to the store to buy a new pair of jeans and pay double for them, do you? No. So why would you do that with an asset? It's the same thing. Like, I'm not going to rush to my local taco stand to buy $5 tacos because yesterday they were $2. It makes no sense. Would I rush to the local taco stand if they were $1? Yeah, because it's 50% off and I love tacos. Right? I wish more and more people would apply that to trading/investing. Yeah, everything came off for 2022. And I said that it was likely the best opportunity that you're probably going to see in many, 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 many years to invest in some of your favorite companies: Nvidia, Tesla, Intel, Microsoft, Apple, all of them. Turned out to be the right call. All right, moving on. But yeah, that Deutsche Bank is getting its digital assets license. It's a lot of good news, man. There's a lot of them. Like, I think there's like 4 major headlines that came out since the BlackRock news was announced, right? 4 major headlines. And let's make no mistake, right here is when the BlackRock news was announced. Thursday on the 15th of June. And we were very excited. Yeah, but right here was resistance, so we were kind of, trend lower and all that. So we wanted to see it break out, but I was trying to get long. I just missed the boat. I got stopped out. It is what it is. We move on, right? Because I know I'm going to get an opportunity to buy or sell another asset. Look at all these assets right here. These are all on the watch list. That means I'm actively watching them. Then I also every single day go through for all my Forex pairs just to see what's happening in the market overall on the day. It doesn't mean you should. That's just what I do, right? All right. Good morning. Anybody else constantly buffering issues with my live streams? Yes, my live stream sucks because of my internet. I apologize about that. No, it's my internet, Ben. It's not yours. That's been the major issue for me going live since I started the YouTube channel 2 years ago, is the buffering and the garbage, the not loading and all that. It sucks. I'm waiting. I'm on the wait list, so I just gotta wait. It's not a money issue. I have 2 different internet providers right now, and both of them suck. All right, so yeah, that's that. RUT would be good measure of real economy than S&P. Well, let's be clear. The S&P is actually the best. It's not here. First of all, let's say this. Asset prices do not reflect the overall economy. All right? And I'm going to tell you why, because nobody else will. Asset prices move based on supply and demand factors. You have a lot of money managers in America, a lot of investment banks. It's a free market. It's a capitalistic market. So basically, what you have that makes up the S&P is a lot of people's money, right? They hire money, invest somebody else, their bank or some other outside money person that will take care of them. And all they're looking for is a modest 8% return on an annual basis. All of those people have to be in the market. They will not be on the sidelines. You get my drift? Like, the reason you're bouncing is like what I said before. It's the first time since COVID that you had an opportunity to invest in an asset at cheaper prices. At cheaper prices. So money managers will put their money right back to work. A lot of money managers do quarterly portfolio readjustments. So basically every quarter they look at what's going on and they readjust their asset or their entire portfolio. But if you just take 1 second and look at the S&P 500 throughout its entire history, you can clearly see that minus a couple years here and there, right, where you had massive declines in price, the majority of the time is spent moving up. Clearly up. You got teachers, police officers, firemen, everybody that has a 401k is literally in this asset. Then your RUT or the Russell is your small caps to medium cap, right? That's market capitalization. So your smaller companies, right? Smaller companies. So it looking at asset prices is not a good metric to judge the economy, because right now the economy, although it is, there's a lot of things out there that is weakening, right? A lot of things. The one thing that hasn't yet has been unemployment. And that's literally what the Fed is wanting to see go. So that way they can say, okay, boom, there we are. There's a recession. Now we can start lowering rates, and hopefully, because that literally helps the inflation rate come down. So that's kind of what they're doing, in like a simplistic way of explaining it. Asset prices in no way reflect the economy. Asset prices move based on investors' sentiment. So if you are bearish, most investors are bearish and they're putting on hedges or outright short positions or just plain selling their money, getting out of the ETF and jumping into, say, bonds or treasuries. You see what I mean? Supply and demand. People are jumping into your lower term, like the 2-year, right? The 1 month, the 2-year, the 5-year, because they're all higher. They have a bigger yield than the 10, 20, and 30-year. So yeah, some people are doing this, obviously, right? A lot of people are doing that, but asset prices are still moving higher. So like I said, it doesn't really matter what's going on in the economy overall that is going to judge what happens to asset prices. You literally have only about 10 to 15 stocks that's propping up the S&P 500, mainly your tech stocks. However, once people start taking profits on their Nvidias and their Teslas and all this other things, they're going to rotate that capital into other companies, i.e. your Russell, right? So if the Russell starts to get nice and bullish, that is going to make the broader marketplace move higher. It just will. That is, of course, as long as tech remains solid. Your best companies are the ones that are literally flying, or your most speculative. Tech pretty much owns the world right now. Google's and your Microsoft's, like, yeah, it's just simple supply and demand. They got to put that money to work somewhere. And, as you can see, they're putting it in treasuries, they're putting it in this, they're putting it in everything. Price is elastic. So, yeah, in deep bear markets, you will have bear market bounces. However, this time is different. It just is. All right, you're coming into a monthly area of potential supply, so this is not an area that you want to buy just yet, right? You wanted to buy down in here. So, like, as far as me telling you what assets to invest in as of right now, find companies that are good companies and that, like, are kind of still floating around the nearly open, as those will be the assets capital will flow back into. That is, as long as sentiment remains bullish. And the NASDAQ, I mean, dude, you know what I'm saying? I would call this something more than a bear market bounce. You're 7%, 7.75% off the all-time high. Some assets have already made fresh all-time highs. So does that mean those assets are bearish? No. The exact term of bearish is this. This is bullish. That's where most of your people get everything wrong. All of your people that are still looking at this right here for the reason that you're going to see lower asset prices in the future, they're just wrong. They're looking at all the data out there that suggests that there potentially, maybe in the future, might be a recession. How's that going to help you now? Like, right? If you're a trader, then you should be long. You should not be short asset prices, right? I mean, look at that. That's fresh all-time highs. That's not in, never has a bear market made fresh all-time highs. None that I can think of. I mean, the definition of a bear market is when an asset price loses at least 20% of its overall value, which means all-time high. Apple, fresh all-time highs, guys. Now, you still got some that haven't. Obviously, Amazon. Is Amazon a good company? Yeah. Are they having a little bit of problems with some lawsuit? Yeah. So, would I invest in Amazon right now? Well, it's cheaper than it was by a little bit. It was $187, but that was after the split. This thing used to be like $2,000, right? So they split it. So that's why it's cheaper now. Your Google, it's still not making fresh all-time highs. So there are only a few out there that are flying to the moon, right? Facebook, absolutely ripping to the upside. Is there going to be a pullback soon? Yes, but would I consider 1, 2, 3, 4, 5, 6, 7, 8 bullish months in a row to be bearish? No. Nope. There's your open of the year. I mean, from the yearly open, it's just straight up month over month. So third quarter, probably going to see some pullbacks in a lot of these assets that have been flying. So right now is not the time to invest. Wait till the end of Q3. See what happens. See where we are then. But I definitely wouldn't suggest buying this close to the end of the month. This close to the end of the quarter. You got 8 days left on this quarter. First 2 quarters were nice and bullish. Nice and bullish. Bullish, right? Super bullish. Obviously, this thing needs to pull back. This is getting out of control. Yeah, it's literally supply and demand. You get the AI craze going. Everything's always a bubble. There's always something that happens almost every single quarter. I mean, every single like third year. Some one specific, like back in 2000, it was tech. And then what, like 3 or 4 years ago, all the pot stocks were going crazy. Then it was what, EVs, they were going crazy. Now what is it? It's AI. You see what I'm saying? There's always something. But that narrative alone is enough to cause demand. And demand is all you need for asset prices to rise. Does not matter what the economy is doing. Now, obviously, it would be better if we were doing more manufacturing and things like that. It would be better if the yield curve would get uninverted back to normal, right? Because it's very not normal when asset prices are moving higher during a yield curve inversion. But after the yield curve gets inverted or uninverted, that's usually when the recession happens. Like if you go back and look at all the yield curve inversions, and I don't care which ones you look at, you can look at the 3-month, the 5-year, the 3-month, the 10-year, the 2-year, the 10-year, 2-year, 5-year, 2-year, 30, whatever yield curve inversion you want to look at. A lot of cases, the recession happens after the yield curve inversion fixes itself. Yeah, and you don't need to look at a chart, like an actual chart that shows the yield curve inversion. All you got to do is look at the price or the yield in this case. All right, the yield is 4.7%. So as long as this number is higher than 3.7, you have a 2-year 10-year inversion. 3.775. So that literally means that if you buy the higher out, you're making less money. That typically happens when the marketplace is going crazy. People don't know where to put the money. So they start putting their money in the near term yields, and there you go. So we'll see what happens moving forward. But as of right now, I mean, there's no point in looking for puts or losing all your money, selling every swing high. Just follow the trend. And that's on whatever asset you're trading, because every asset is different. Yeah, it's me, Ben. Like I said, not sure, but mine is working. Just love this masterclass giving knowledge that's not even with payments. Thanks, boss. You're welcome, man. It's my pleasure. My pleasure. As long as the internet works, I'll go live twice a week. To be honest, that's the only reason I don't go live all the time. It's because of the internet. It's terrible. All right, 15 minutes behind the recording, but do you think now could be a good hedging opportunity? Yes, depending on what asset you're talking about. Obviously, if it's Nvidia, yeah, start hedging. S&P 500, yeah, because like I said, you're getting ready to come into Q3, and since Q1 and Q2 were bullish, there is a potential that Q3 closes out bearish, right? It's just, that's as simple as I can put it. So, I mean, are we out of the woods that we're not going to make fresh yearly lows? No, we're not. All I'm saying is, like, we've been all over the markets. Every major market turn we have called since this YouTube channel has been live. Now, I do miss sometimes the day trades when we take them. Sometimes I get lucky and it works. Sometimes it don't. Obviously, that's the way day trading is. But as far as major macro turns in the marketplace, I've always been the one that's basically doing the not popular thing. And that's typically the reason why it tends to work out, right? You got a lot of people, guys, that are out there that literally never ever looked at a price chart in their freaking lives until 2 years ago. And now they act like they're master trader, investor / economists. What do they do for a living? They have a job. Oh, okay. So they're not. They literally are not. Right? They're not. I know of like 4 that have a massive following that literally just started looking at charts in 2020, 3 years ago. And now they're master traders. Amazing. It's amazing. Took me a lot longer than that. You teach us where to find opportunities, and it was a great opportunity finding. Thank you. I appreciate that. Good morning, everyone. Heath, and any thoughts on Tesla? Yeah, it's probably going to pull back soon. Like, this thing has been on fire, just like a lot of other tech stocks. Tesla is typically traded as a tech stock. I definitely wouldn't want to be a buyer into quarterly resistance 8 days away from a fresh quarterly open. All right. So, I mean, that's like the reason why there's a potential that you could see Q3 open and a lot of things start to pull back. I mean, things are already starting to pull back before the quarter even opens. Tesla, not really. Well, Tesla for a while was kind of sideways down here. And we were looking at like 157 and then the closure of this gap for areas to get long. It did not close the gap. It just took off. Boom. Up. So, yeah. Tesla is into quarterly resistance. There's nothing. Well, there kind of is. There's a monthly close there. Of course, there's a monthly close there. It's a quarterly. On the weekly, you can see there, little gap there. It's actually, since the last time you were trading around 312, that's your last upside gap. I don't see anything up in there either. So, yeah, that was like literally the last gap to the upside to fill. There's filled. Like, yeah, this was like the last one. And it filled, so people were, this is a big move from the yearly open. Jan 3. That's your yearly open right there, that white line. So Tesla's up on the year 120%, man. That's whatever your account was, it is double now. Depending on if you use leverage or not. Also, I got some people in the Discord that bought it like 120s, 125s, 128s. A fantastic place to buy. Fantastic place to buy. And we were waiting on it. We were waiting on the yearly open. Intel. Yeah, Intel's got some news out. Let's go check it out, see what it's doing. It is one of the laggards that you would figure would be bouncing, right? Based on AI. They haven't really came out and said anything as far as I know about AI. Of course, they mentioned it, but Intel's a good company. They got crushed before the bear market started. Like, the bear market really technically started around November 2022-ish. Or no, 2021, sorry. 2021. So yeah, this thing was getting a little bit hit before that. As far as charts go, it's not the most pretty. All right, there's your tech boop. So, but, maybe, I mean, they're a good company. So if I was going to be looking to invest in tech, this would be one of my favorites to watch for sure. You got weekly support setting at 28.84. If you get a close below that, then the next place that I would look to buy would be 27.05. If you start closing weeklies under that, then you might want to wait, right? Because something could be wrong. Investors are just not soaking this thing up as good as they are other assets. But like I said, when they start rotating out of those assets, maybe they'll start picking up some of these laggards. And that would also help the market as a whole move up. So Intel's up on the day, but still down on the week. And it made Microsoft. It made fresh yearly highs. I don't understand why Intel is lagging. Good news, they are, like, someone said there was really good news on there. And it appears that they're selling into that news. Today, you got a daily support at 31.40. So just watch your bearish closes on the dailies and the weeklies and look for those areas to hold. Once again, I wouldn't suggest buying on the first tag of a daily support, but sometimes it does work for an intraday scalp. Sometimes you will get a bounce. If it's a very bearish day, it'll cut right through there. You might get a small bounce, like maybe like an hourly. Get a bullish hourly close, and then the next candle be boom right through. So just be careful. But I do like Intel long term. Long term. That is, of course, if we don't go into a recession and the markets shit the bed. All right. But like I said, Tesla is definitely not in a buy zone right now. Wait for it to pull back into support. Since it was flying to the upside, it didn't give you very many supports on the way up. But there are a few, right? How this candle like opened bullish and then closed bearish and left the gap unfilled, I wouldn't take that support. I would expect that gap to fill. So maybe roughly around 227.82. Start watching there. That's the first place probably that I would be even interested in looking for longs. You can see how overbought it is on the daily. Weekly, not quite. 3-day had a nice pop up there after it lost it. And so maybe if you could get back down there, roughly somewhere close to this area, maybe you could be a buyer then. But I wouldn't be a buyer up here. Now, that's not to say it won't continue to go up. I can't see into the future. I just wouldn't buy it at fresh yearly highs. Fresh yearly highs, especially when you're into a quarterly resistance and you got a couple of days left on the quarter close. So I definitely want to see how the quarter closes in regards to 265.25. A closure above that means it's hard to say, right? It's been flying, so what's to say it can't continue? It's in the midst of a short squeeze, I guarantee it. Wait. What are some good take profit regions? Depending on where you got in, now is a good time to start taking some profits because you're completely overbought. Massively overbought. And price oscillates. It doesn't just go in one direction. Right? I mean, sometimes it does, but it oscillates. See how yearly open, you were oversold. So that would have been a great spot to look to be a buyer, even for a bounce. Right? Just look in history on Tesla. Like literally every time it gets close to the oversold region, It's time to buy it, baby. Right? I'm not saying that you will hit oversold. Eventually you will, but I don't know when. Maybe wait for oversold again. I know it's hard to do, but either the 50% retracement or oversold. And I don't know where that'll put you, but make sure that it is at a weekly or daily support. Don't just buy when it tags that. And I definitely wouldn't buy if it tags it in the next few days, because that means something else is going on. Then you actually have bearish momentum, and you don't want to buy like that. You would definitely want to see a support hold. So I don't know what price it would be to get back to the 50. A 21 exponential is a good indicator to watch, but it's, in a choppy environment, it will not help you at all. But in a trending environment, it can. Maybe wait for the 50 on the daily. Or if you get, like, say, a bearish close under the daily 21 and the very next daily is a big bullish engulfing, then you could be a buyer. Like, it just depends on what you're looking at, where you got in, all that stuff. I have no clue. If I was in it long, anywhere under $200, I would be taking profits now, especially because this isn't going to keep going. Like, once you get above that, it typically means, you're going to see a pullback. It's not the most overbought it's ever been, though. Even when it was breaking out back here, right? It struggled at the 21, but the 50 held it pretty damn good. So you hit overbought here again, and you pull back dramatically under the 50 down there, but to the 50 here. So just look for something like that again. And it will happen eventually. It has to. Price oscillates. It's elastic. It moves like a rubber band. It gets too expanded and then it drops as people take profits. Especially as volume moved to TUSD since zero fees. All right, so I must be missing something. All right, here we go. Cheers to you as well. Thoughts on Wix always being filled? Wait, what? Thoughts on Wix always being filled? Bitcoin TUSD daily chart. March 36K and now crazy illiquid wick on Binance USD 138K. Yeah, Binance isn't the best exchange to trade on because they have those freaking nasty ass wicks. BTCU. Wait, what did you say? TUSD? You mean USDT? No? You mean TUSD on Binance? Yeah, that. Are you asking, will that wick get filled? Like, will price go back up there? I mean, it's possible, but yeah. Dude, this right here is, if that actually is where the price went and then closed back, like what? From 36K all the way back down to 24K. So that's a $12,000 move in the span of a day. And I bet if we go inside of that day, it's going to be inside of an hour. Yeah, it is. It's 1 hour. That is, get off that exchange, dude. This is why I got off of Kraken, is this stuff right there. Now, US users can't use Bitget anymore, but Bitget doesn't do this. This never happens on Bitget. You're not going to find any scam wicks on Bitget. That is a scam wick. Yeah. And Binance is shady. The SEC is literally, yeah. They're just shady. They said that the first day on Binance US, 99% of the volume was provided by market makers that CZ owns. Now, I don't know if that's true. So I'm not saying that that happened, But it is out there. And if that's the case, that's shady, man. I mean, it's like literally nobody was trading on that exchange except himself. So yeah, be very careful. I mean, there's nothing that's going to ever tell you that that is going to happen. Right? So no, it doesn't mean that that will get filled either, but you do have a nice bullish push here. I don't know what true USD is, right? I have no clue, but it's definitely wicky. I mean, you got massive wicks over here. That's impossible to hold a position. Impossible. Like it's not technical analysis. There's no technical analysis in the world that will help you with crap like that. I wonder what the volume looks like on that candle. None. Literally no volume. No volume at all. In fact, there wasn't any volume on this exchange until recently. Yeah, I'd stay away from that, my friend. When stuff like this happens, the way I look at it is that literally means that I have no chance, because I have no idea when that's going to happen. There's no way to account for that. And no matter where your stop is, that's going to get smoked. Like nobody in their right mind would short here and throw their stop all the way up there. But if people were long here, if that was real, which they wouldn't have been able to catch it because it was literally within an hour, I bet it's 1 5-minute candle. It goes all the way up and comes down. That's usually the way those things work. Like in 2-3 minutes, it spikes and it comes right back. It's not real. It's manufactured. It's garbage. That's why I quit trading on Kraken. Like I almost got a margin call once, me, on Kraken because of that. I was short Ethereum versus Bitcoin or BTC ETH, and there was a nasty, nasty move. No, wait, I was long, and there was a nasty move to the downside, and I was getting emails, and my phone was going off talking about margin call. But then 2 minutes later, it sprung right back to my entry. Yeah, that was the day I left Kraken. The day. I'm like, screw this. I'm not trading this garbage anymore. Like, stop me out, take all my funds, and then 2 minutes later, it's right back where I took my entry. Yeah, F off. All right? No way. Because on Kraken, you can't even use much leverage, like 5x leverage. So that means price literally moved what? Like almost 90% on a wick. Get away from that. And yes, please, Johan says, can you give some thumbs up? I'd love that. Thank you very much. Yeah, Beardy, I don't know what this is, man. Just trade BTC USD. Trade the inverse swap contract. If you are able, I mean, I'm sure Binance has one. If you're trading on Binance, what I would do is I would deposit Bitcoin to Binance and then use their inverse purple or perpetual swap contract. That way, instead of buying Bitcoin with your own money, you can trade your way to owning more Bitcoin. Obviously, that means if you're a profitable trader, but even with Bitcoin USD, I think they've gotten a little bit better. In the scam wicks, like, yeah, that one's not, I don't think that one's, yeah, that one's real. That happened. Yeah, so they got a lot better. I don't know if it was as that bad, but on Coinbase. But I do remember this. Of course I do. That was when my profit target was hit. I had a bearish profit target of 26K. And that's when it got hit. So yeah, I would trade like this instead of that true USD. I don't even know what that is. Our options in the US are getting very, very limited as far as trading goes on Bitcoin. 250 seems to be support for Tesla. I don't know, man. Ooh, I mean, there is a daily support there, but you're still way overbought. On this day, right there, that bearish close, look where you were on the RSI. You see that? You're so overbought. Like, there's no way I would expect that candle to hold support. I would look further down, my friend. That's just my opinion. It's your money, but my opinion is let it cool off. There's a gap right there. You opened just above it today. So more than likely, like, I would probably be selling calls above 270 or 265 based on this candle here and based on the close. Like, since that other white line right there is your quarterly resistance, that's your Heath level. That's supply. That is overbought. So intraday, if 261.50 ends up being the high of day, that would be a short opportunity. And my take profit would be around the open. Yeah, for sure. Like 260 puts. 2 weeks. Let me see what 260 puts 2 weeks out is. 15 days, July the 7th. $260 puts are in the money. So, yeah, well, of course, because price is $258. Damn it. My mouse hit my keyboard. So, like, open interest is very high because prices have been skyrocketing because you're overbought. I mean, not open interest, implied volatility, sorry, is very high because prices have been rocking and rolling. So I wouldn't even buy options on this. I don't like to buy premium unless it's like at 50 or under, because then you're paying too much for the premium. Because if price just trades sideways for 2 weeks like it did on what was it, TTWO? We got short on that stock using puts, and it literally almost got all the way to expiration before it actually moved in our direction. I mean, yeah, that same thing can happen on Tesla. So with that implied volatility that high, I don't think I would do it. I just short the outright stock. And I would do that via watching 30-minute closes. All right. If you close a 30-minute candle above 261.50, or maybe even a 15-minute candle, then bail. Then bail. Because you're even overbought on the day, intraday. But I would only be looking, like I said, I would only be looking for a scalp. Like, price gets just a few bucks in my direction, then I would take the majority of the profits off, leave like 30% of the position open, and then that's it. Move your stop to break even, right? I don't like the short assets that are like this, though, because they're so bullish. And if it is in a short squeeze, which it obviously appears to be, then shorting it is just going to end up getting you in trouble, right? That's why it's hard for me to short Bitcoin, but obviously it worked right there. See? Do you see that? Like, you could have shorted the close of that candle, put your stop above the high. That's the strategy. Take profits now because you made a fresh daily low and beyond. But it's just like, yeah. I still wouldn't like it, but obviously it worked just because of how bullish it's been. That's the simple, that's the reason that I don't like the short super bullish stuff. But obviously it works sometimes. Sometimes it don't. Would I buy this? No. Yeah, maybe. And then it needs to hold there. If this 15-minute candle closes lower than that one, then I wouldn't even mess with it. Because as long as your candles are trending, you don't want to try to get in front of that. Now, at some point, like maybe now or soon, or wait for a bullish div intraday even, right? I know a couple people, you do that. But yeah, should have shorted that, but it is what it is. That would have been a nice move because you're down almost 1%. And that's from the open. So that would have been a 2% move with 20x leverage. Yeah, you're looking at about 30%. But those are the areas to watch. And you guys know that if you've been following me for any length of time. That's all you do. You find your day. When you go intraday, you look for those resistances. This was obviously it was a trap when you took out the low of that candle. So this candle closed higher, drop. Then that, right? This was just a spike to liquidate early shorts. Or people looking to go at that heat level there before 9:30. Let's see what happened in or around 9:30. There's 9:20, 9:30. Then you get one more run, take out that swing high, and then you over. But that's hourly resistance. You only tagged it once. But as far as buying it for like a longer term hold, which is what most people want to do with Bitcoin, it needs to chill out. I mean, you literally hit overbought based on 3 days. Boom, boom, boom. 3 days you hit overbought. that's some momentum right there. So today it closes bearishly. Hopefully it closes above the midpoint of yesterday's candle. If it does, then we'll watch that price moving forward tomorrow. Or even like you guys that are awake from the Asian and London sessions, you can watch those areas at those times too. Let me read this. Bitcoin pullback to the daily open now. It actually dropped well below the daily open, which was expected. Like you came very close to making fresh yearly highs. So of course sellers are going to be there and people are going to take profits there. So what we want to see is we want to see the momentum continue. So it could close bearish today and tomorrow. Now I'm not saying that's going to happen, but it could. And then you could close 3 or 4 bearish days. So we just have to wait and see how it plays out. USDT Binance US for 138K. Okay. Yeah, I wouldn't mess with it, man. What's the deal with Bitget? Are you still trading on it? I am, but I'm having a lot of people saying that they're having trouble. Now I have forwarded those UIDs over and I have gotten a response. I forwarded it and he says, by the way, Bitcoin is 30K now. Do you think it's dumped back or keep pumping? So like literally the guy that, like my representative that I talk to between Bitget is asking me what to do with price. But for all of you that are having trouble, like I said, if you're in the Discord community, obviously it's going to be easier for you. But if you did use my link and you sign up for Bitget and now you're having issues, you're going to have to find some way to personally give me your user ID number and I can forward it on to them. But that's literally all I can do, right? He said he is working on it. I had 3 people message me yesterday and say that they're still having trouble even after they forward me their user ID. So I forwarded it again and said, that they're still having troubles, and I screenshot what I was screenshotted to him, and he said he's going to work on it. So yeah, if you're not in the Discord, find me on Twitter, instant message me, DM me privately, obviously. You don't want to just throw your user ID out there. But if you can get a hold of me privately, I'll see what I can do for you. But just understand that that's probably, breaking laws. But I mean, there's other ways. Obviously, everybody knows that's used to how everybody traded in the early days of crypto, is just use the VPN. I never did because I don't want to do stuff that's illegal, right? So it just depends on where you live. If you don't live in America, you should have no trouble at all. But if you do live in a country and Bitget is not accepted there, then, I don't know if I could help. But I'll do what I can to help. It's just, everything's taking a dump for US users as far as crypto is concerned. But I've started in FX and stocks, so that's my baby still. All right. That's my baby still. Yeah, sorry about that. All right. So there ain't any other questions. For people that aren't in the US, there is a Bitget link in the description. If you want to use it, please use referral code XTSC. That is X-Ray Tango Sierra Charlie. And I appreciate it. But as far as I'm concerned, like whether you can or can't trade on the exchange, I liked it better than any other crypto exchange I ever traded on. I traded on KuCoin. Didn't really like their leverage slider. You know what I mean? You could only risk 5%, 15, 25, 50, 75, all that garbage. With Bitget, you can risk increments of 1%. So it just made it a little bit easier, and the platform was better. It was a great exchange, and it sucks that they're pulling out of America. All right, if there's no other questions, we're going to wrap it up. Remember, we're waiting for Bitcoin to find support. We need it to find support, preferably on daily closing bases. All right? Preferably. There hasn't really been any, like you can see here on the last big pump, you literally got one bearish day before you got another couple bullish candles out of the deal. Big short squeeze, right? It did pretty much the same thing. Went down to oversold on the daily, straight up to overbought. Boom. And then on this time here, once you get above 28K, it gets a little bit, iffy, because most of the accumulation that we know from the beginning of the year occurred during this right in here. And those people, and in here. I think it was in here, actually. This is where the majority of the accumulation occurred. So anybody that was sitting underwater, they could end up selling now because they're above water, right? If they bought it there, they're in profit now. So they could exit or they could hold. We don't know what's going to happen. We never do. That's why we let price show us. And sometimes it just doesn't work, right? But we stay on top of it. This is what I do. So every single day, I am watching price. I am looking for supports. This was a day where you took out the previous day's high and closed below. That's what we call a bearish engulfing. And then boom, right? That was a trap. So we could even potentially wait for that. We'll take a swing at it tomorrow, maybe, if today closes bearish. There'll be two places to watch, obviously. Intraday support and the low of day. right? So what I mean by that, tomorrow, if you close today bearish, tomorrow wait for like find an intraday support, use the hourlies, find support, and then potentially watch for that low to get smoked. Today's low. So wherever this thing closes, tomorrow opens. Maybe it goes up a little bit, then it comes down, smokes the low of day. That would be an opportunistic area to potentially look for entries. Make sure you manage your risk because it does not mean you will win. Okay? It's just an area that I would be interested in potentially buying. Tomorrow, liquidate the low and go. But that is only if the short squeeze continues. But you can see over here, right? Once you got up here, you were unable to maintain daily closes above that. So there's big supply setting that, like from 28 to 30K. Big supply. So we definitely don't want to see a big down day, right? We just want to see a little one like that. Or like this, right? Something like that. You can see as it was moving up down here at the beginning of the year, up, down, up. That would have been a stoppage probably. That wick went low, almost down to that daily open. It did go down to this day's open and then up. So we'll look for something like that, but we can't. I wish it wasn't. I wish it would have stalled above the 50 for a day. That would have been fabulous. Like just get above it for one day. Because once you broke above that 2-week support, it was sayonara. Later. All right, so we'll go ahead and wrap it up. Are you still looking into BitTrue? No, I'm not. I got the same message, and before I could set it up, like before I could set up an affiliate link or anything like that, I got the message. I got it. So there wasn't no point for me, dropping a link for them if I can't even trade on it. They ultimately fixed it, but it's just one of those things, right? My money's like still at Bitget. Hopefully everything chills out with the SEC in the next few months and maybe Bitget comes back. Right? That would be great. But at the same time, as always, no matter what exchange you're using when it comes to cryptocurrencies, don't only keep an amount of money that you don't care to lose, just in case. You can put a little bit of money on exchange, use leverage, but don't keep a lot of money on the exchange because you never know when one day you go to log in, you can't. Then it's just your money's gone. And I don't expect that to happen to Bitget, but people didn't expect it to happen to FTX either, right? Or Luna or any other exchanges that's failed over the years. You guys have a fantastic rest of your day. Hit me up in the questions if you need to ask me anything, right? I look at all of them. Thank you guys for your time. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.